Hi everyone, today let's talk about inflation, then we'll go over the economic factors, as well as Max Payne, then we'll get into the charts, as well as my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So inflation rose at 4%, the lowest in 2 years. Obviously, the markets liked this. Core CPI went up 0.4% and 5.3% on an annualized basis. So core is still quite high, but regular inflation is coming down because of food and energy. Food has come down quite a bit, and that's helping. But we also need to see those core levels come down, and that's not quite happening yet. You can see the April numbers here at 4.9%. Down to 4%, which is a very good move. You can see how this is continuing to trend down very aggressively on all items, but core is continuing to hover in this zone. It was a slight step down as expected, but not nearly as good as you would have wanted. They say the slide in energy, 3.6%, really helped that CPI move lower, and food only rose by 0.2%. I've seen some articles talking about how eggs have peaked and they're now moving lower. So overall, we're seeing things move in the right direction, but core is still quite sticky. Moving over to the economic calendar, you can see core CPI at expectations for month over month as well as year over year, but headline coming in lower than expectations on both accounts. Overall, you like to see it, but you'd like to see core come down a little bit more. And then looking at tomorrow, we have PPI in the morning and then FOMC in the afternoon. Current expectation is a pause, and we'll look at the Fed futures, but everything points to a pause for tomorrow, and I expect that as well. Looking at Fed futures, you can see almost 90% here. Inflation numbers helped that. Everything is pushing towards that pause. Going all the way to January now, you can see we are still at that pause level, which is a little bit more than we thought. And looking at March, you can see that first potential cut. So markets are now expecting higher for longer. I feel like that's pretty well priced in all the way to March of 24. So quite a few months at current levels before we see any cuts. And the markets continue to rally in this type of environment. So there's no longer a disconnect in my opinion. And it will be interesting to see the dot plot from the Fed tomorrow. Moving over to Max Payne, the current Max Payne level continues to creep up. It was at 410 over the weekend. It's up to 415 now, so it's continuing to get a little bit higher. You can see that 415 level here. 420 would not be shocking. That is the highest call strike, which is interesting. So maybe right around that 420 to 425 area. That would be a pretty substantial move lower if we were to get that kind of a finish. We're currently all the way up here at 436, so all the puts would expire worthless at current levels. I don't know necessarily if that's the finish we're going to get. Maybe we pull back a little bit to 433 just to edge out some of these calls. Put call ratio still at 2. Number of options still very high at 5.4 million. So overall, maybe a slight dip into the end of the week. Moving over to the charts, we'll get through just a few of them here. It is pretty late for me due to work, but looking at the S&Ps, you can see we continue to rally. We're right on trend, not super extended in the shorter time frames, but definitely extended on the longer ones. Still overbought, volume still picking up. Momentum still very bullish. Watching that 439.98 level, I would expect to hit that tomorrow on the Fed announcement. Probably see a big wick through that level and maybe somewhat of a rejection just because of how extended we are. Momentum actually curling over on the shorter time frame, so maybe a slight pullback to the 21 EMA on the hourly down at 435.50. Overall, can't bet against it. Everything is still super bullish. Moving over to the NASDAQ, still a very strong day, gap up, and then basically held in that gap area. It threw a couple of wicks to the downside. You can see that here on the hourly chart. Found support at VWAP. Similar to the SPY, momentum starting to roll over a little bit in the shorter time frames. Right in the middle of this zone for me, between 359.93 and 365.80. Could absolutely push above this level tomorrow. Again, potentially a wick rejection in that zone. Momentum on the daily, however, still bullish. RSI still bullish. Everything looks very strong on the NASDAQ. And until we get a roll reversal, you have to trade bullish. Moving over to the Russell and the Dow. The Russell missed my price target by 2 cents. I was watching 189 and we got up to 188.98, so just barely missed it. But I would call that a price target hit could absolutely find some reversal at this point, but momentum bullish, RSI definitely bullish. We're above these trend resistances. Horizontal resistance, like I said, 189. I would like to see it get above that level. And then there's actually quite a bit of room up to 195.15. I'll look for some levels in here for tomorrow's video, but definitely some open space. Dow also wicked my price target, 343.23, closed right at the high going back to 1 May. You can see how important this level was going back to January, wicked those highs. Now we have to see what happens. So we got the flag, the rally, and we're waiting to see what happens at this level going into the FOMC. Moving over to Apple and Tesla, you can see Apple, slight bullishness on the day, but still holding at these peaks. If it's going to break out, you'd want to see it happen tomorrow, but momentum is starting to fade a little bit. Does kind of look like a double top here on Apple. Of course, everything is still very bullish, so I wouldn't necessarily bet on that, but it's certainly possible that this is starting to look a bit like a top. Tesla on the daily chart, absolutely super aggressive, gap and go again, leaving lots of gaps in its wake here on this rally. As long as this continues to happen, the NASDAQ is going to continue to go higher. 264.68 is my level of next resistance. Moving over to staples and discretionary, you can see staples again starting to ramp, looks nice, getting above that 55 EMA just for a minute and then held at that level on the 4-hour. Discretionary cooling off here after hours, still a bullish day, but certainly finding some resistance in this 166.78 area. Looking at breadth here on the 50 and the 200, gap up. Nice rally, got above 62.25, watching for this to push up into this next resistance at 77.46. 200 also doing the same thing, getting into this resistance zone. Really, I want to see it push up to 64.74 or even all the way up into these highs around 70.24. Overall, still very bullish and continuing higher here on breadth. Moving over to J&K and TLT. J&K making higher highs, throwing some wicks. Again, I would really like to see a nice close on this. The close yesterday was not great, and the close here today also not great, but it's still slightly bullish. Momentum and RSI are both bullish. TLT, on the other hand, pulling back. I'm a little bit surprised by that. I thought yields might cool down a little bit and let TLT rally, but you can see we're still in this same zone that we've been in. No major changes here on TLT. Moving over to the volatility indices, move, not moving very much. VIX, cooling off from that 1498 level, testing the 9 EMA, certainly could find a little bit of a pop from here. Momentum continuing to step up. RSI cooling off though and still bearish. Really you want to see this get up to the 21, find some support and then rally if we are going to get a down move, but we're just not seeing that yet on the VIX, and I'm currently attributing to this slight push up to the FOMC coming in tomorrow. Moving over to my accounts, right around 500 on the day. You like to see it. I still have that put at 185. I believe I rolled that up a little bit here today. Probably could have rolled it up again, but we'll see how it plays out tomorrow. I might take this off. It's already in mostly a profit already. And then looking at today, I ended up letting these 356 calls go. I just think we might see a little bit of a pullback after the FOMC announcements and all of the news has come in. It might be a little bit premature, but it does seem like we might get a little bit of a pullback. I still have my 357 puts, which are almost in max profit already. And I did roll out these 358s to tomorrow. I have $5 credit on that, so my break even is all the way down at 353. So I think it's pretty unlikely I'm going to lose money on this position, but we'll see how it plays out tomorrow. If we do start to see some weakness, I probably won't expand into the Thursday expiration. But right now I'm pretty light on positions, so I'll definitely be keeping an eye out. Everything is still super bullish, but like I said, a little bit extended. And once the news is done tomorrow, certainly could give markets an opportunity to pull back a little bit, either this week or early next week. Let me know down in the comment section what you thought of the inflation data. Are we on the downward slope? Are we going to see another spike? Or is this all done? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.